Intuitive Machines is one of the most innovative companies in the stock market today. Understandably, a lot of investors are interested in this stock, given that it has missions to the moon. That's how innovative this company is. So, if you're an investor that's looking at this company, here are the things that you should know. At the very least, things you should know about the company before you make a decision on whether or not to buy, hold, or sell.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So, in their latest quarterly conference call, the company's management team said that they believe the United States returning to the moon has and will continue to have bipartisan support as we enter the next generation space race with China. And that's true. The competitive landscape between countries, China specifically, has intensified in recent years. The geopolitical tensions are about as high as they've been in the last decade, and the United States does not want to be left behind here in this new area and will spend the money to achieve superiority. The government has made it clear that returning to the moon is of strategic importance to the United States. And so the company says that they need to start gradually learning about how to live and work on the moon. They believe NASA must continue to partner with commercial industries to drive an affordable, incremental roadmap that enables steady, visible progress. And this has been the US government's strategy in recent decades, is to outsource some of these capabilities, some of these services. Instead of NASA doing these things internally, they're looking for partners outside of the company in private enterprise like Intuitive Machines to achieve some of these goals that the agency has. And this has been true across departments in the government. It's not only NASA that's undertaken this strategy, as government agencies are realizing that private companies can do things more effectively than government agencies can. If you've ever worked for a government institution, you'll know how slow things are and how inefficient things can be. Just visit your local DMV to realize this fact. And so, yes, it makes sense to outsource this, and I would wish the government would do more of this across more areas to reduce waste and inefficiencies. Right? So, on top of those grand vision type of things that you should know about Intuitive Machines, it's also important to get an understanding of their financial position. In their latest quarter, they did generate an impressive gross profit at 4.1 million for the quarter compared to negative 13.8 million in the same quarter last year. The operating loss for the quarter at negative 14 million was an improvement from negative 24 million in the same quarter last year. So already the company is making meaningful progress towards profitability. Of course, this is very early stages for this company, but it's impressive that they're already demonstrating progress towards profitability. The operating cash used was 18 million in the quarter, with capital expenditures of 1.4 million, resulting in a negative free cash flow of 19.3 million. If you look at their cash balance, that increased significantly to 89.6 million. That was driven by an increase of $80 million of cash raised in the quarter through at the market offering program. So selling shares of stock to raise cash for the business. They sell stock, they get cash, and that's what raised the cash balance to 89.6 million. Another calculation I like to make with companies with negative free cash flow is to compare the cash balance with the cash burn. So they had about $90 million in cash, and for the most recent quarter, they went through $19 million. So at that rate, that gives the company roughly 4 quarters of runway before they need to raise more cash. But they've already raised more cash since the company made this announcement. Management said that 2 significant receivables were collected shortly after the quarter ended, and so that raised their cash position at the end of October to 107 million. Furthermore, since this statement was made in mid-November, they raised cash in December, raising roughly another 100 million by selling more shares of stock. So they likely have, and this is an estimate, somewhere around $200 million in cash. And compared that with the outflow of 20 million in the most recent quarter, they have about 10 quarters or 2 years, 2.5 years worth of cash before they need to raise more capital. And they did this because the share price had soared in the last year. And so they took that opportunity to raise even more cash, give them a longer runway so that they have more capital to invest in research and development. And then, you know, 8 months later or 12 months later, when if they need to raise capital again, hopefully they will have made progress and they will have more evidence to show to investors to say, look, we're a company worth investing in. Look at all these things we've accomplished since the last time we raised capital. We have more deals now. We've made more missions to the moon. We have more partners. NASA is giving us more contracts. And so you should now invest in us, and you should invest in us with a lower cost of capital because now we are a lower risk compared to where we were 8 months ago or 12 months ago. So they ended the third quarter with a backlog of $316 million. And the company expects that backlog to continue growing as they receive new deals from task orders while winning new business domestically and internationally with multiple U.S. government customers. So a backlog of 316 million and growing is great news for Intuitive Machines investors because this is orders that will eventually turn into revenue. And when you have a backlog of this magnitude, it makes it easier for you to go to investors and say, look, we already have these orders in place. We just need money so that we can fulfill on these orders. And it makes it investors say, oh, okay, all you need is money so that you can build the things that you need to service this order, and then you're going to get the money. So it's not very much of a risk for me to give you money because you're going to use it to get this sale. And so for that reason, they have the backlog and they are more comfortable with what their revenue will look like this year. They're narrowing their full year revenue guidance to a range of 215 to 235 million, and they're trending towards the midpoint of that range. Whenever a management team, especially for a company that's more risky, like Intuitive Machines, whenever they give you this kind of information and they narrow the range, that decreases risk because it removes uncertainty. I should say reduces uncertainty, not removes uncertainty. And if you reduce uncertainty, you're reducing risk because the variability in outcomes is now narrower. And so it's less risky, and investors are again willing to give you money at a lower price if you have less risk. And risk is a big factor for a company like Intuitive Machines because it's so innovative. The outcomes are so uncertain. It can be really, really explosive, or it could be crash and burn. And so every step, every progress that signals it's closer to being explosive really has a huge positive impact on this company's stock price. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.